Is it visible my screen, you guys?
Yes, yes, my brother. I see it.
Yes.
Perfect. All right. So up till now, I think the amount of topics we've discussed is kind of a bit saturating, and there's like I feel you guys are being overwhelmed. I mean, a lot of you guys are like, oh, when I follow this one falls apart. Oh, when I follow this one falls apart. And there's like so many things to check. How am I supposed to check all of these things? It's kind of tricky and everything. It is, and you're gonna get better with more practice, obviously. And today we're gonna have a discussion on market structure, and it's a discussion of more likely trying to overlap the concepts which we already know and try to learn things which are correlating to it and add additionally to it. We have completely separated our learning. We were first learning the chart patterns, and now we are on the on indicators and the miscellaneous topics because I felt like these were the ones which should be taught right now to you guys first, so you guys can do some active analysis because these are the things which require most practice. Chart patterns are like I'm just gonna teach you guys, and then you're gonna keep on spotting it. I mean, they require pretty much practice too, but I think these are the most fundamental things. And every time I start with chart patterns, but then I love to switch to these because chart patterns kind of seem boring to me. And then these are the fundamental most things which actually drive the market. And chart patterns are kind of like cheat codes, kind of like they give you an idea what's going to happen, not really knowing what's actually happening inside the market. So, no, these miscellaneous topics of actually understanding what's happening in the market is actually quite important to understand. So today we are going to study very simple basic topic, that is market structures. What is market structure? So basically, there's only three structures that the market can show us. It could either be in the upward trend. Let me just erase it. It could either be in the upward trend or it could be in the downward trend. And the third scenario is it could consolidate. Now, I want you guys to look very carefully over here. Whenever the price is in the upward trend, how do we know that it's in the upward trend? Obviously, when we are looking at the past, when we are going back into the graph, then we can see it. But when we are actually trading in the graph, it is quite tricky. So let's just first discuss how we can actually look at the past, and then we're going to be using it to actually use it in the present. So the way to see upward trend, the way to spot an upward trend is higher highs and higher lows. As you can see, this was high number one, H1. This was high number two, H2. This was high number three, H3. Now, as you can see, these highs are consistently high. None of them like came a little bit down first or like is in accordance with that. These are consistently high. Same thing with the lows. This is low number one. This is low number two. This is low number three. And as you can see, the lows are consistently high too. Now I'm sure you are wondering, oh, these are things we already know. Wait a second, I'm gonna make sense to it, right? Similarly, if you look at the downward trend, these are the highs and these are the lows. And as you can see, every low is lower than the first low. This was the first low, this was the second low, lower than the first low, and second low is low, third low is lower than the second low. Same goes for the highs. So basically, higher highs and higher lows is upward trend, and and lower lows and lower highs are downtrend. You do not want to have trade opposite to the trend. That should be in the mind. Now, the other day when we were talking about support and resistance levels, how market bounces off from the support and pulls back from the resistance, that was for the consolidating market, right? And as you can see, there's no such thing over here. If you draw a support over here, there's no point in drawing a support over here. So that's for the consolidation market. When the market is having, and how do you know that a market is consolidating? Market is having equal lows and equal highs. That's a consolidating market. And the strategy to trade a consolidating market, I've already taught you. You have to buy at the resistance, sell at the support. And I'm going to make more sense to it too. I'm going to add further things to you. But for the bigger picture, that's like in a nutshell. So how to trade these upward and low downward trends when the market is in upward trend for days? Because that's the tricky part over here. Because let's say the market is in the upward trend, making higher highs and higher lows. But see, this retracement is basically what like throws people off. That they feel like, oh, market is rising for a while now and it's now correcting. Maybe it's gonna correct all the way up till here. Let's open a chart. Oh wow. Or let's sell over here. Perfect spot to sell. And then market just reverses from here, either hitting your stop loss uh or just you repent that you sold over here. You could have bagged much more profit. So there should be some way to confirm it that is the market actually coming down and is going to give us a reversal, or is it an upward trend, right? Because right now you can see this whole picture. Right now you can see this whole picture, right? Right now you can see this whole thing. But in the live market, you only have this upward candle, this upward going trend, right? You don't have none of this. So when you're seeing just this, chances are that you would think, okay, this is a nice climb, and every time there's a climb, there's retracement. So let's just pull a short from here, right? That could result in a loss. So we have to have some kind of a strategy that tells us when the market is actually going to reverse and when the market is actually going to continue its upward trend. Now, there's going to be another strategy basing on the same thing. Today, we're going to talk about one of those things. The second one is going to be Fibonacci. The first one that we're going to be talking about is the break of structure. Now, what I mean by a break of structure is I'm going to draw it over here now. Let's say this market was going like this. It made a higher high, it made a high, then a low, then a higher high, then a low, then a higher high. And after that, the market came down right over here. It kinda came down the previous low. That is called a break of structure. So when the market is in the upward trend and it's coming down the previous low, so we have no longer a higher low, that is called a break of structure. So as you can see over here, we do not have higher high. We were having higher highs, but we no longer have higher lows. We had a higher low over here. This L2 was higher, but as you can see, the L3 was no longer higher. So we do not have higher lows. We have a lower low. That is called a break of structure. Now that's the point where you might want to expect the price to reverse. Same goes for the downward trend. If the price is in the downward trend and we are facing lows, highs, lows, highs, as you can see, that's lower highs, H1, H2, there's a lower highs, lower lows. And if the market over here gives us another lower low, but then the high is actually higher than the previous high, we do not have, we no longer have a lower high. We have a higher high, a break of structure. There was a structure forming over here. So whenever there's a structure forming, whether in the upward trend or downward trend, You do not want to trade in the opposite direction unless there is a break of structure. Okay? Make sense or not?
Oh, yes.
Yeah, yes, yeah. You
Yeah.
are a legend.
All right. Let me just add some more to it. Right? Now, this strategy, although seems very simple, but could be complicated when you're actually trading live. So that's why practice is important, and we're going to be having scenarios where things could get a little tricky. And right now, I'm just drawing it on the graph in 2D, making it really simple and really beautiful for the eyes. But the graphs are not really that beautiful. There's going to be like ton of multiple candles, making it foggy and making it shaky for you guys to actually spot it in the real time and just like confuse you. So you have to use other things too, like fair value gap, and you have to use the indicators too. You have to use the patterns too. You have to use the candles too. We're going to be using everything. Now, I cannot emphasize this more. The more things we know and we combine all of these things, our probability of predicting the market goes up by 1,000,000%. So for us to do that, we need to know all of those parameters which we're going to be looking for, and we need to be expert in all of those parameters so that right now when you're looking at the graph, you're thinking about, oh, Samtat is this, Samtat is this. Let me just apply this first, then let me just apply that first. But once you're an expert, I'll tell you, you will open a graph and you will apply it automatically. It will become your instinct. It will be like, okay, yeah. I found it, this, and everything. Everything is gonna make so much more sense. You're gonna be like, oh, this is really, really good, and wow, yeah. All right. So this this was what? This was actually a lesson on that we only want to trade against the trend whenever there is a break of structure. Now, today, I want to talk about something else too. I'm going to talk about what's called supply and demand. All right. So, supply is basically supply and demand, right? We're not going to use these fancy words, right? We're going to keep it simple. And in the end, I'm going to tell you what is supply and what's in demand. So basically, whenever the price is going up, you know why the price is going up. There's a lot of buyers. And whenever the price is going down, you know why it's going down. There's a lot of sellers. So you might want to first mark the area where a lot of buyers are sitting. And how would we know where a lot of buyers are sitting? A lot of buyers, whenever there's a place where there's a lot of buyers, you will see sharp candles. If there are a lot of buyers, you will see sharp green candles. You will not see like small green candles rising up for like a long period of time. You will see sharp green candles. You will see sharp movement. That means that a lot of buyers are sitting in that particular zone. Now, for sellers, you will see sharp red candles. Very similarly. Now, I'm going to tell you in a while how this is going to be useful for us, right? So let's take an example over here. This BTC graph right here. This is the current BTC graph, which was, I think, yesterday. It gave us this pump and then dump. Now, if you can look at this graph right here, the graph first was consolidating, right? Consolidation means no big buying, no big selling. Just I would just draw the support from resistance, and it's perfectly just oscillating between it. And you could just buy its support, sell in resistance, buy its support, sell in resistance. Right? This is a 15 minutes graph, so you might not want to do it. If you're a future trader, then you might benefit from it. But as you can see over here, there was a huge red candles over here, right? Red candles, two red candles. So that means this zone, there are some sellers sitting here, right? There are some sellers sitting here. Now the price moves down and you did nothing, right? The price moving down, you didn't take no trade, right? This is not the time to take trade. This is time to observe. And you know which kind of traders actually win on the market? Which actually observe. Take some time to just look at the market, see what people are doing, and once they observe it, once they know all their actions, once they know all their game, then they dive in. When they know all their cards. A foolish person dives in when he does not know what the market is doing, when he does not know what the buyers and sellers up to. A perfect person or an ideal person is the one who actually plans his move. So over here, I am looking that the price sharply decreased from this zone. So that means there's a lot of sellers in this zone. So I might want to just mark this zone, right? That this means that this zone is seller favorite. Okay, I'll mark this zone and then I'll wait. The price went down, 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 down. And then over here, we had some three sharp green candles. I was like, okay, some buyers are sitting here for sure. Some buyers are definitely sitting here. Let me just mark that zone, right? I'm not taking any trade once again. I am just analyzing the market. I'm just analyzing my enemy against which I have to act. So this is the zone for future reference. And again, right now the market is at this level. I cannot see any of this, right? This is not yet formed, right? So now, since I've marked this zone, I now know where the buyers are and sellers are sitting, right? So as you can see, the price is surging and I'm just waiting for it to go into the seller zone now. Now I have a zone, right? Now this whole of my planning and everything, it's time to it's time to put that into work. And as you can see, I would wait for the price to go into the seller zone and then I will sell it over there. Or if I am a future trader, I will open a short trade where the sellers are sitting. Only a foolish person would do a long trade where the sellers are sitting because this is a seller zone. The sellers have done it once at this zone. They have sold everything at this zone. They would do it again. History repeats itself. Now, the price very briskly went up, and this was the seller zone, right? So for me, I'm just gonna short in the seller zone. I'm just gonna short it over here. Or maybe wait some while because these are like giant red, green candles. Wait for them to like go up to a resistance, one red candle, and then I'm gonna short it because I know it's already around the seller zone, right? So wait, obviously I'm gonna wait for it to get some resistance. And as you can see over here, these was a giant green candle. So I would not trade over here. I would wait it for some resistance. As you can see, the resistance is already forming here. How would you know it's a resistance? Man, equal highs. Look at this. Market once went there, equal high, second equal high, third is red candle, resistance. Draw it. Just for like the fun of it. Draw that. All right. So you entered short over here. And why did you enter short over here? Because there was seller, that was the seller zone. The market is already in the seller zone. And guess what happened after there? Market started giving us lower lows and lower highs. Previously we were having higher highs. Look at this. Higher highs and higher lows. Now market is giving us lower highs, lower lows. That means we have a shift of structure, shift of structure. Look at that. Look at that. What I just taught you right now. This was the last uh, lower high, right? And the market has completely broken the structure. And after that, it just continued to fall. And why did it fall? Because it was in the seller zone. So you have to sell in the seller zone. You have to short it in the seller zone. And where will you buy it? In the buyer zone, where the buyers once pulled the market up. Now, as you can see, the price really, really beautifully come down. And I took the short trade and I'm in profit. And as soon as the price enters this buying zone over here, as you can see, it is very beautifully respecting the buying zone. It's not going any further down because buyers are sitting there. Buyers are sitting there because you know these charts, they are not like magic or something. They're literally buyers and sellers. That's it. Buyers are buying it, sellers are selling it. Unless until you are seeing it that way, never going to be able to break it down. Never going to be able to break the system, break the matrix. So as you can see, my the price of my graph is now in the buying zone. What I'm gonna do? Am I gonna buy or I'm gonna sell? I'm definitely gonna buy. I'm definitely gonna buy, wait for it to go to the seller zone, and boom, it's almost in the seller zone, sell it, coming back down, right? Comes back again in the buying zone, buy, go back up, didn't quite go into the selling zone, have my stop loss in profit, wait for it, right? Now, let me just scroll it further. Okay, let's just not scroll it. First, let's have some further discussion over here. Are you guys with me?
Yes,
Yes.
yes, yeah, yeah.
That
Yes, my
makes
bro.
sense.
It so makes sense. What I see right now, yeah. When I look the big picture, it so makes sense.
Perfect.
Everything.
All right. So now that so this was one concept, right? Break of structure, buying and selling zone. So this seller zone is called supply, right? And this buying zone is called demand. So uh that's just a fancy word that if someone asks you that if you're telling someone, oh, I've actually learned from partner traders, and they were like, oh, really? You've learned from partner traders? Okay, tell me what's supply and demand. Basically, just a fancy word. So you were like, oh, what is supply and demand? He only taught us about seller and buying zone, got confused. So this is like dumb people do it. It's just like supply and demand. Okay, just name it supply and demand, whatever. But for you, you just need to know it's just sellers and buyers. That's it. No fancy words. People like to complicate it, call it supply, demand, and stuff like that. No, 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 no. Just think of it. Sellers, buyers. This is the selling zone where the sellers are sitting. They have done it once. They have done it over here. They crashed the market from here. They will do it again. This is the selling zone. And buyers, they bought it from here. They are buying from here. They've bought it once. They will do it again. And then again, how to mark this zone? Big candles. Big red candle is called big red candle after consolidation, or big red candle after a rise, and then green candles after the fall is consolidation. Now, obviously, all the other aspects are combined over here. If you look over here, there's like huge fair value gaps left over here. The market has to fill the fair value gaps. I've already told you. There were fair value gaps left here. Market filled that, right? And if you look at MACD over here, MACD is going to be crossing at this point too, giving us signal to. If you look at RSI, RSI is going to be overbought too over here. RSI is going to be oversold over here. So see, all these things are parallelly overlapping, and then support and resistances are always there. If you just draw a support line here, this is going to make sense too. If you just draw a resistance line here, that's going to start making sense too. Again, you are buying the support, selling the resistance, buying the support, selling the resistance. So my friend, in the end, all these things are interconnected. If you're going to think of every new lesson which I'm teaching you as a separate one, you're going to be doing a mistake, and I'm going to be doing a mistake too if I'm not pointing it out every time I'm teaching you. So every time I'm teaching you, I have to go back and I have to combine and I have to recall you guys that all these things are interconnected. I'm not teaching you anything new. I'm just adding to the things which you already know, making you perfect every single day, making your basics stronger and stronger every single day. Now let's just quickly remove all of this. All right, I did not want it to remove that. Okay. All right, let's just move it further now. Now, as you can see, the price, if you see over here, the price is the price again went into the buying zone and then again skyrocketed. And it's now in the selling zone, right? But right now it's currently rising, right? You wait for it to catch resistance, and guess what's gonna happen when it's gonna enter this zone? Enter this zone, have some resistance. It's already in the selling zone. Chances are it will drop. Obviously, you will look at the bigger picture. This is 15 minutes time frame. You will look at the 1 day time frame, draw support and resistances, check them level 2, right? And you would take a trade over here, with a stop loss above the resistance. So if it's a stop loss, it's just a small stop loss. If it's a breakout, because breakout can happen too sometimes, it's like manipulation. Market does give you sometimes manipulation. So that's you have to be careful from that, right? Sometimes unexpected things happen. It's crypto, but 95% of the times our strategy will be followed. So as you can see, this was a little concept about supply and demand zone. This is a little concept about buying and selling. So now you have to understand this, that there are a lot of stupid buyers and stupid sellers in the market. People who don't really know what they're doing. And there are a lot of smart buyers and smart sellers in the market, people who actually know what they are doing. You have to choose, you have to make a choice for yourself whether you want to stand with the smart buyers and sellers or you want to stand with the stupid buyers and sellers. Let me tell you what a smart buyer and seller would do. A smart buyer would always look for the buying zones where a lot of buyers are already present. And a smart seller would always look for a selling zone where a lot of sellers are already present. Let me tell you what a foolish buyer would do. A foolish buyer will always buy when he will see green candles. Now, over here, he will not buy. He was like, oh my God, red candles. Market is collapsing. Crypto is in danger. Maybe crypto will fall. Crypto will cut corrupt. No, 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 no. I'm never going to invest my money. No, never. And then he sees green candles. He's like, oh my God, crypto is booming. Elon Musk was right. Crypto is future. Let's just buy it. And then he buys over here. And then it's in the, this already in the, it's in the supply zone. It's in the sellers area. And then market crashes from there. And then he's like, yeah, man, I told you crypto is scam. Elon Musk is scamming us. That's what he do. So you want to decide whether you want to side, whether you want to be one of those good buyers, or you want to be one of those reckless buyers which always buy when they see green candles, right? So all these things, they are just to make you perfect, to understand what's actually happening in the market. Buyers, sellers, that's it. Nothing. These indicators, all these things, these are mathematics. Some things to actually help you out, not to govern you from the very beginning. They are not they are not governing you on all your steps. They are just to help you out, just to give you an indication. See their name, indicators. They are not deciders, they are indicators. That will only give you an indication, a hint that come on, there's a hint. Use your knowledge. Can you find something? And if you do, go for it. So see, don't rely on all indicators only. That's just a hint. Use your basic most knowledge. Buyers, sellers, that's it. Obviously, news based pumps and dumps will be there. But the thing is, again, news based dumps are again will be respecting the support and resistance. It's just that crazy it is. News based pumps and dumps, you will see them respecting support and resistance. You will see them respecting uh structure, break of structure, because every time there's like, let's say there's like a really bad news, right? Let's say there's like a really bad news and the market suddenly crashes with like a right giant candle. Obviously you don't want to trade on that. You wait for it to get resistance. Once it has resistance, it has a previous seller zone over here. Let it rise first, let it rise to a certain point, let it fall back again. Now you have the buying zone and the selling zone. This was the buying zone. This was the buying zone where the market gave us green candles and it started to rise up. And this was the selling zone, this whole one, right? Basically, this was the selling zone. So you can just wait for it to rise back up again, and from where it's getting rejected again, this can become the selling zone. Now you can have two strong selling zones, one buying zone just straight after that. So every time there's like a big giant pump, big giant dump, don't be just like get overexcited. Don't be an emotional trader. Wait for it. Give it some time. The market is not gonna like turn off. Some people think that market is giving us big move. Let's just dive in. They have this imagination in their mind that after this market is gonna like shut down. It's like a computer that is like on, and like after this the whole dump or pump shut down, time's up. Okay, good night. No more trading for you guys. The traders have already made their money. You can now go and do some chef job and then like do some other job and make some money. Trading is not for you. Nothing like that. I'm making sense to you guys.
Yes.
Yes, of course.
All right, guys.
Yes,
I
my
want
brother.
you, I want you to practice this supply and demand zone. And obviously, this is going to be in accordance with fair value gap too. Fair value gap is going to be here. Support and resistance is going to be here. Supply and demand zone is going to be here. But make sure you practice this supply and demand zone. Make sure you can find out where the buyers are, where the sellers are. And look at this. Resistance is already here. And monitor it, what it does. Okay, monitor it and see if the resistance, see if the supply is actually working here. Less than 1 minute. I'm going to be seeing you in the next class. Thank you so